History may not repeat, but it often rhymes. On 2nd August last year, Friday, a weak payroll and weak manufacturing PMI that week spooked a nervous market that fell sharply on Monday, the 5th August, exacerbated by unwinding of the yen carry trade, pushing the Fed into a 50 basis point cut in September 2024. Fast forward to 2025 August, weak manufacturing PMI and an even weaker payrolls report last week kickstarted August on a tough note. Last night, AMD and SMCI missed, and while these are by no means bellwethers, could they be the canaries? As we noted last week, skittish markets are facing resistance near all time highs. This applies to the MAG 7 and other major Asian indices. US majors, Nasdaq and S&P are still holding about 3 to 4% above breakout levels, but will need to keep defending these to keep the bullish agenda alive. In the meantime, gold is making its fifth attempt in as many months to break out. While Truth of the Tape is generally not a huge fan of seasonal patterns, and while it's good to keep an eye on historical triggers, the macro setup has some similarities worth considering. To set direction, the trigger we're watching is how equities behave relative to gold, and of course, what the jobs market does this month and what the Fed does next month. Futures are now pricing in the probability in excess of 90% for a 25 basis point rate cut. Will the Fed repeat history with 50 basis points, or will history just rhyme? Like, subscribe, and share. This is Sunil Garg from Lighthouse Canton.